And how does the U.S. reclaim the $25 billion plastic goods market from China? Joining us to discuss is Nathan Lord, president of Shale Crescent USA, a nonprofit research and economic development organization which aims to create high-wage, career-oriented jobs in Ohio, Pennsylvania, and West Virginia. So first of all, good afternoon, Nathan. Thank you for joining us. To start off, can you give us some background here, some background information on this issue? Context, what does it mean when we say there's an opportunity for U.S. manufacturers to reclaim the plastic goods market from China?
Good afternoon, Don. Yes, thank you for having me. And you're exactly right. Our opportunity to onshore manufacturing from China to the US has never been as great as it has been right now. And I can tell you why. The reason is really quite simple. It comes down to US energy. I'm glad to talk about that more.
Okay, yeah, let's talk about it. What is it about U.S. energy that we have this opportunity at this moment?
So when you think about products like plastics manufacturing, petrochemicals, steel, rubber, they have an extremely high energy content. And really the profitability of even being able to manufacture those products comes down to, do you have affordable energy? And so the same forces that led to the offshoring of manufacturing in the US created the Rust Belt in the middle part of the country and led to a lot of lost manufacturing to China have reversed course and are now favoring the US better than they ever have. And I want to give you a statistic here just to show you how large this shift has happened. So the US used to be a net importer of energy. Today we are a net exporter of energy. And you take the three states, Ohio, West Virginia, and Pennsylvania. If they were a country, they would be the third largest natural gas producing country in the world. So those three states, 30 times smaller than China, yet produce 50% more natural gas than the country of China does. So when it comes to products like plastics that have an extremely high energy content, whether you have energy or not, is a huge factor. And we have energy here in the US.
So it's making it more competitive here in the U.S. In terms of its pricing, and that's why we have this opportunity.
Absolutely. Most people still think it's cheap labor, which drives the profitability of manufacturing. That's not the case. What it comes down to are two things, and it's really quite simple. It's where's your location and how much should you pay for the energy. And if you've got those two factors in your favor, you've got an incredible advantage over the rest of the world. And so I'll walk through this for a second. Our natural gas in what we call the Shale Crescent USA, Ohio, West Virginia, and Pennsylvania, gets piped down to the Gulf Coast of Texas. Texas turns it into polyethylene, essentially plastic resin. That resin gets shipped over to China. China turns it into a child's booster seat, bought one of those last week for my children, and they send it back to us. How is that economic? The reality is it's not economic anymore. And if it's not done that way, China has to import their energy. Remember, we're a net exporter of energy. China's a net importer. And if you look at the natural gas prices today around the world, the price of natural gas in Asia is around $11. The price of natural gas in the Shale Crescent USA is $2. So anywhere from 5 to 10 times more. That's how much Asia pays or even Europe pays for their natural gas, when here in the US, we've got extremely low prices.
Now, Nathan, let me ask you this, and it might sound like a basic question, but perhaps some of our viewers are wondering this. Why is it important to actually reclaim this plastic goods market from China?
Don, great question. The manufacturing jobs that we create here today create a tremendous amount of other work from that. For every one manufacturing job created, there's a direct 5 other jobs that are created with that. It's the largest multiplier of any industry. And so when you think about the Rust Belt that's been created in the US, that largely occurred in the middle part of the country. And now we're positioned to be able to bring manufacturing jobs back, unlike we've ever been able to do before. And again, I'll say it, it's not the labor. Yes, labor in China is cheaper than it is here in the US, but labor, they don't work for $1 a day anymore in China. Since China was let into the World Trade Organization, the cost of labor has increased tenfold, and it increases about 10 to 15% every year. Yes, it's still less expensive than here in the US, but when you look at the breakdown of how much does it cost to manufacture an energy intensive product like plastic based goods, think of a child's booster seat, a table, plastic pallet, window shutter, something along those lines, basic plastic goods. It's the energy content which drives the cost and the profitability. And if you can locate on top of your energy supply and be in the center of your customers, you have a huge advantage. So think about the middle part of the US. If I were to drive a circle around where I'm located today in Ohio, it would be half of the US population within a 1 day's drive. So if I'm a manufacturer, I have the opportunity to manufacture my goods right here, use the low cost energy, the low cost resin right here, and then sell into one of the largest markets in the world. It's the only place in the world where intensive energy supply and then world class demand are in the same location together.
So this low-cost energy, is this shift happening because of organic market forces, or is there federal involvement here? I'm just wondering this point.
Yes, great question. So, really, what's taking place is basic supply and demand dynamics. We produce so much natural gas in the US now that we are oversupplied essentially, and the price is greatly decreased. And what's taken place is really the technology of horizontal drilling and the development of shale. It used to be that the three states, which you see on the screen right now, produced only 3% of the nation's natural gas. Today, we produce well over a third of the nation's natural gas, and that's a result of unlocking the resource in the shale formations through horizontal drilling. It's our abundant supply. And if you talk to manufacturers around the world, you'll often hear this. They struggle with a term called energy insecurity. If you're in Europe, if you're in Asia, that's what you're experiencing today as a manufacturer. You don't know, A, if you can get your molecules, energy, or how much it's going to cost for you to have that energy and those molecules to make your products. Here, we experience energy security and we have it in abundance. And that's why we're an opportunity for the rest of the world to locate here and experience the highest profitability for energy intensive manufacturing. Our
So
team wakes up every day and works on identifying what are the most profitable locations in the world for manufacturing. We analyze it. What does it look like in China or the Gulf Coast or in Europe or in California or other parts of the world? And it comes back, it's really quite simple. If a manufacturer can locate on top of the energy supply and be in the center of customers, there's a tremendous competitive advantage, which leads toward increased profitability.
So, Nathan, you mentioned security a couple of times. So, I'm just wondering here, our previous dependence on China for plastics, you mentioned there's a job aspect, manufacturing aspect to this, but is there a national security aspect as well?
Absolutely. I mean, it doesn't take too much of a memory. We don't have to go too far back to see how during COVID, all the supply chain disruptions that we experienced. I think for the first time, there were Americans asking questions. Wait, what do you mean we can't get this product, or why isn't this available? And what we saw was a disruption in the global supply chains. And yes, it is secure. If you can drive down the road and see the manufacturer that's producing many of the modern products that we use today, just there in your local region, you know you are more secure in being able to get those products. And we're talking about plastics today. And yes, the $25 billion of plastic imports from China is low hanging fruit, but really this applies to all energy intensive products, plastics, petrochemicals, glass, rubber, steel, the items that make up modern life and are critical for the security issues in this nation.
Okay, just one last question here, Nathan, and I don't know if you can speak to this, but how will China respond to this? It's got a couple of tools in its toolbox because Beijing could use subsidies to try to regain market share. It could use dumping tactics. Can you just talk a little bit about that finally?
Yes, and those are all tactics that China will probably use and has used in the past. And I know right now we're countering that with tariffs. And when you look at the tariffs today, they're around 30% for a lot of these goods that we're talking about. But what I'm talking about is something that is a long term fundamental shift. It is a huge difference when you're the region of the world that has energy or you have the feedstock, which essentially is natural gas. When you have that at your feet, you have a long term fundamental advantage, which is very difficult to compete with. China imports energy. We have so much energy, we export it. We want to use the energy and the resources that we have here in the Shale Crescent USA and create low cost manufactured products. That's very hard to disrupt. Yes, China has tactics which they can utilize, but really, when we see things how we're countering it with the tariffs or the ways that we're countering some of these issues, I would say it this way: the rest of the world, China, Europe, and others, have been paying essentially a tariff on their energy and feedstock for the past 5 to 10 years at the form that's anywhere from 5 to 10 times higher than what we pay.
Well, Nathan, I have to say, very fascinating discussion today. Thank you very much for your time.
Thank you, Don. I appreciate it.